This is our Forex blog for September 9th, 2013, and this is probably the easiest way of trading you'll ever see. And it's one of we have many methods that we've taught and have taught over the years. This is the easiest way of trading. We visually can see what each individual currency is doing. You have the dollar, the yen, the pound, the euro. You can see a wealth of information right on the charts. For instance, the hourly moving average. Above it, currencies tend to go up, and when they break it, they go down. It acts as support resistance, so once broken it tends to continue in that direction, just like with the euro acted as resistance, a little bit of resistance here. When it broke out from below to above, it's likely to go up, which it does. We have the outer containment bands. When price hits these, it tends to stall and reverse. I mean, you can see it went through here and then very quickly reversed, went through there, went sideways, and kind of drifted down. You can see the other lower containment bands. This one touched it by the pip. Very rarely do they go through these areas and keep going. They're based on our past statistical models. So how do you trade with this? That's the easy part. You just simply look to buy strong currencies versus weak and sell weak currencies versus strong. If the euro was weak and the dollar strong, we'd sell the euro dollar. But in this case, it found support at the previous day's most actively traded price in all the euro pairs. So anytime a support area holds and you get a breakout, it's extremely likely to work. Then just bring up any intraday range or tick chart, and for this case, because it loads faster, I'm just going to bring up a 5-minute. You can improve your odds even more using tick or range charts. But it's that simple. You can see this breakout happened. It went from below to above the hourly here at 8. The dollar was weak all day, and you can clearly see the dollar going down, then sideways, whereas this one's just going sideways after holding support. So really, anytime the dollar broke down, you can be looking for buys in the euro dollar, and especially when the euro broke out around 10 right here, it's a no-brainer. The dollar's been going down all day. The euro went from below to above its hourly moving average here, went up about 20 pips and went sideways for an hour and a half, broke out, and you can see it went up over 50 pips. Here's the same chart with the range charts, and you can very clearly see when there's a breakout and you want to buy the pullback, and also sideways rectangle patterns like this and this. And typically I will, when the market first starts to break out, buy these areas. The farther up it is, I typically want to wait for some kind of a pullback, even if it's a mild one like that or like this. Let's take a look at some other examples. You can see the yen, extremely weak, daily, weekly, monthly trends down. It is underneath Friday's low here for most of the day. It's not able to really go anywhere, and you can see it makes a slightly lower low here at 9 and then breaks out a little bit before 10. What a high probability place to buy the euro yen, especially at 10, because the euro had, or the yen had, no strength whatsoever all day. It broke down a little bit before 10, whereas the euro broke out to the upside. You got a great trade right here around 131.50, and it went up 70 pips. So you would have made probably 30 or 40 pips, bought this pullback, make another 20 pips. That's how you use it. It's that simple. Now you can also use these to do counter trend trades. For instance, if a currency goes to its fib targets, which this one did, right to the 1.382, it happens to be right near a major resistance area. You can consider looking for counter trend trades here in pound pairs at 11. At 11, this one is up too much. The dollar is down too much. It's also a lot weaker than the yen at that time. You could definitely consider a small buy in the pound yen around 11, because the yen's down near its lower band, likely to get some kind of bounce up. The pound's likely to fall, and you can see coming up to 11, it did fall 20 pips, rallied back up, fell 20 pips, and then went sideways. So you can use these to trade with a trend and against the trend, and you can also draw trend lines on these. because these are now built into the software and not a script, trend lines will work and you can get notified. And speaking of trend lines, another amazing way of predicting where the market will go in the next 5 to 30 minutes. Take a trend line like this, duplicate it, project it from a swing high, and these are wonderful areas to get into counter trend trades, because most of the time trends kind of continue in an orderly way. If they overshoot the upper projected band, when it comes back down into that range at 11:10, very likely to reverse up. So if you look at this chart here, 11:10 right here, market went down. Unfortunately, the yen went down as well. But if you look at most pound pairs around 11, you can see this one fell, never went higher than that high. Let's look at the euro pound. It's likely to go up at 11, which it took it about an hour, then it did, because we have a very likely to go down pound. So look at the pound Swiss around 11. Guess what? It went down. Pound CAD around 11. Guess what? It went down. So these currency indexes can be used for trend trading and using Fibonacci profit targets, support resistance, or outer containment bands, projected trend lines, and a lot more. Basically, any reversal pattern works on these currency index charts. You can predict when an individual currency is likely to go the other way, then find one that's most likely to go up when this one goes down. And that's another thing I found. If you predict that one will go down and one will go up, there's 3 ways you can make money. If they both go in a predicted direction, usually you're going to make 20 to 50 pips. If one of them, and in fact, if they both go in the direction that you think one of them is going to go in, let's say the pound falls faster and the yen also falls, but at a slower rate, you'll still make money selling the pound yen. The only time you lose money is if the pound continues up while the yen continues down if you sell the pound yen. That's pretty much the only situation. So they both can fall and you can still make money in a pound yen short. If one of them falls and the other one goes sideways, typically you're going to make 15 or 20 pips. So one of them can just kind of go sideways while the other one falls, and you'll also make money in that situation. So, and you can watch each of them like a hawk and just kind of trail your stop down. If this one's going down, just keep putting your stops over the previous bar's high, or wait till it gets to a lower band and then take some profit off the table.